So why don't you guys just start off by going down the line and just say who you are, what your fund is, and what you look for.
Hi, my name is Zach Coelius. I am a washed-up entrepreneur. I've been punched in the face for so many years. I'm enjoying that media. I'm an early-stage investor. I invest in software companies, generally enterprise-ish, but they range from autonomous cars, anti-drug technologies, data, marketplaces, you name it. Early stage. So look forward to early things.
He invested in Cruise. Is that your biggest win
So far.
so far?
Yep.
Cruise automation, that was huge.
Not lucky for me anything.
Hey everyone, I'm Matt. I work with a firm called Greylock Partners. We're a venture capital firm here in the Bay Area. We invest at all stages, predominantly Series A, Series B, but kind of anywhere seed through growth. Investing out of our 15th fund, which is $1 billion fund. Also all types of technology, consumer, enterprise, units.
I'm Billy Draper. I work on a fund called Draper Associates, early stage sort of generalist fund. It's a $190 million fund. We invest about $1 million in the companies valued between 5 and 10. And similar, across fintech, logistics, marketplaces, very opportunistic.
Awesome. Has anyone ever heard the name Draper in the Valley? Yeah. Okay. I think I went in and pitched your grandpa, I believe, one time, actually. Yeah.
Wonderful.
He was great. Awesome. So, fundraising's changing. It's an interesting time to be investors, I'm sure. Interesting time to be entrepreneurs. Since you guys have been investing, what are some of the biggest changes you've seen? Like, what's happening in your world in terms of how you source deals, in terms of, how you're processing deals? I mean, angels come on, give a little flavor.
I think there's just so much more information out there. It makes our jobs in a lot of ways much easier, in a lot of ways much more difficult. And then on top of that, we're able to learn a lot about a company by a Google search, by Googling a founder, by reaching out to customers very easily. And then I guess in the last couple of years, crowdfunding has come along. And we're going to, I think, talk about that a little bit. And ICOs are now coming along, and that seems like it could be a real revolution in fundraising. I would just say the amount of information available to us with, relatively little work is probably the biggest thing that's changed in the last 5 years, at least I've been doing this.
Do you find yourself being more of a data-driven investor than how your grandfather may have done it, which was maybe more look in the eyes and kind of, judge the...
I think so. My grandpa always tells the story about how in the early days, in the sort of 60s in venture capital on the West Coast, they would drive around, and whenever a sign said anything about technology, they would knock on the door, and all the deals were 50-50. So they were really great economics for the venture capitalists. Since then, our margins have been squeezed down tremendously. But yes, I would say we're more data-driven than that.
It's a good story. So I haven't been doing this very long on the investing side, but some of the things that have changed, just talking to my colleagues who have been doing this for decades, it feels like right now it's kind of a market of haves and have-nots. Still think the demand among investors for some companies is exceptional, and they raise very large amounts of money in those rounds end up being very competitive to invest in and priced very high. And then on the other hand are a long tail of folks that do struggle to raise. I think one of the other things is that in the consumer world, where I spend a lot of time, it feels like there are less breakout companies maybe than there were 5 or 6 years ago as mobile was proliferating as a platform. It was very much kind of a new distribution platform, new distribution channel for folks.
AngelList, crowdfunding, major changes since I was raising money.
Yeah, well, let's talk about AngelList. So you have a syndicate on AngelList, and AngelList came out with that, what they call it, angel funds, right? So how does that change the game? Or maybe give a little overview, just for anyone who's not familiar, and then, does this democratize, VC? What does it mean?
Yeah, so I started what was effectively one of the one of the early AngelList syndicates. And the way it works is relatively straightforward. I find companies I like, I get an allocation, it ranges anywhere from sort of 200 on the low end to maybe a couple $1 million on the high end. And then I have about 1,000 wealthy individuals who choose to write into those deals if they want to. So I'm like, hey, this is branch metrics, I love them, here's why. This is a Series C, Andy Rubin is leading it, there's 60 million coming in from all these other investors, I have this allocation, do you guys want it? And they basically opt into the deal. That becomes an SPV, a special purpose vehicle, so it's just one line in the cap table, and those funds get wired over to the company, and I get carry on that like I'm a venture capitalist. So
How much are you writing, I don't know, use a typical amount, how much are you, is the check you're writing versus your backers pooling together?
So this is all public, but it's mildly embarrassing. I'm actually incredibly cash poor, so I put in $1,000 per deal. I have a special waiver from AngelList actually that show them my bank statements. On paper, there's a lot, but in cash, there's not so much. So yeah, I don't play much.
High leverage.
Yeah, there's. I hope it's starting to be consistent. I'm gonna lose a lot.
Sticking on the AngelList, so what about this new angel fund?
Yeah.
It sounds like they've pooled money and they're kind of putting it into work for guys like you?
So one of the things that's always frustrating for AngelList Syndicate reads like myself is there's only a certain types of deals work for AngelList Syndicates. Because there's $8,000 in fees for every deal you do, you have to put in at least a couple $100,000 for it to make sense because that $8,000 comes right off the top. So if you only put in $100,000, you just lost 8% of your money on day one, which investors don't like very much. But there are a lot of opportunities where it would be a hot company or a small company or a young company or whatever reason the company where you have only been able to invest, say 25 to 50, maybe $100,000 into the round for whatever reason, or maybe the syndicate wasn't the right model for investing. And so they started these things called AngelList funds, which is where they get AngelList investors. And AngelList has three types of investors. There are the sort of institutional investors. So one of those is called CSC, which is a big pool of Chinese money. Another one is called Maiden Lane, which comes from a venture firm called Accomplice. And then there's a bunch of those institutional investors who sit on top of AngelList and invest into the syndicate deals. The second class is AngelList funds. So AngelList creates a bunch of funds that they gather from wealthy individuals. And then the third group is wealthy individuals from all over the world. So what they've done is they've created small funds from these three classes of capital. In my case, I think it's about $1.5 million. They put it into a fund, and then I have the ability to write 25 to 100K checks off of that into deals that wouldn't be suitable for an AngelList syndicate. So I've had opportunities over the last couple of years that were really exciting and I wanted to invest in and wasn't able to do it. But now those AngelList funds enable me to write those smaller, more angel-like checks.
Matt and Billy, how does what he just described here change your perspective being from traditional funds? Big, Greylock's been around forever, Draper's been around even longer than that, I think. So what does this mean for you guys?
Yeah, I think it's great. I mean, as I said at the beginning, we do predominantly Series A, Series B investments, and so I speak to a lot of folks like yourself who spend time working with very, very early stage startups and help them get their initial capital, and then kind of from our perspective, the more innovation, the better. And so if that can help entrepreneurs get over that initial gap, we're very supportive of it.
Yeah, and I'd say in all areas of finance, the first deal I ever did was in 2013, was the seed round of Robinhood. And you see every area of finance empowering the individual to take control of their own finances. You don't necessarily need to call someone on the phone to tell you what stocks you should buy. That's starting to happen in sort of venture capital. It's not only becoming democratized, but also there's so much information out there. It's starting to look, the hot take, in 5 or 10 years, venture capital is going to look very different. I think the idea of this sort of institution with its network, with its sort of, that's more of, going to become more of like a short-term arbitrage opportunity. Everyone's going to be able to leverage their own network to kind of build their own business and build their own investment portfolio. I don't know when that'll be, but it's looking a lot like the music industry in like 1997. Hot take alert.